Chapter 12 is about paying your employees and calculating employee earnings. And everybody wants to get paid for the hours that they work and wants to make sure that they get paid correctly. So, a couple of the vocab words that I wanted to point out before we move on. The difference between a wage and a salary. A wage is an hourly wage. So, if you work a job and you get paid X amount of dollars an hour, that's considered a wage. If you get a fixed sum of money, no matter how many hours a week you work, that's called a salary. So some people make like a certain salary a year, and that is what they make, whether they work 40 hours a week or 80 hours a week. That's what their salary is. And then commission. Commission is where you get paid based on what you sell. Usually it's for sales employees. And so you get a percentage of the sales. So an example of that would be car salesmen. Car salesmen, when they sell a car, they get a percentage of the cost of what they sold that car for. That adds to their salary or their wage that they're earning. And then the other vocab words that are on here, you can look over and what the definitions of those are. But I wanted to point out those three because they're pretty important. A pay period is the number of days or weeks that you work. It's basically what you're getting paid for. So some people get paid weekly, some people get paid every 2 weeks, which is called biweekly. Some people get paid twice a month. A lot of times, if you get paid twice a month, which is called semi-monthly, that's going to be like on the 1st and the 15th, or the 15th and 30th. And then some people get paid once a month. So when you're paying your employees, the total amount that all of your employees earn for a pay period is called your payroll. And that's really important because a business wants to make sure that their payroll expenses and stuff are in check with what their budget is. A payroll clerk is somebody who typically handles that. And the way that you keep track of hourly employees is with a time clock. And time clocks have changed quite a bit in the last several years. So this little picture right here is an old-fashioned time clock. And years ago, you had a little card that you would stick in there and it would punch the time on there. And then you would punch it again when you leave. And then you'd have the little card that told you how many hours you worked. And in today's world, this is mostly done via a computer system. And it might be logging into a computer, it might be swiping a name badge, or some other electronic way that you sign in to let them know when you got to work and when you're leaving work. And then usually that system will either generate an electronic report of how many hours you worked each day, and those can be printed off too if you need them to be. And a lot of times they'll look something like this. And if you look at this, it says on this date, they worked 8 hours. And on this day, they worked 8 hours and 2.5 overtime hours. And it just generates that for them. However, if you don't have an electronic one that does it for you and you have to figure the hours worked, this is what a time clock would look like, or a time card would look like. So this is the old-fashioned one that you would punch. And if you notice when you look at this, it tells how many hours they worked, regular hours they worked, how many overtime hours were worked in a day. And then at the end of the time card, which a lot of times is a 2-week period, it'll give the total regular hours and the total overtime hours. And then from there, you figure out how much they get paid. But before we do that, let's look at that, because notice, if you go back and notice that they clocked in at 8:05 and out at 12:03. Most of the time when you're actually recording your time, it's not going to be exactly 8 o'clock and exactly 12 o'clock. So most businesses are going to round that to the nearest quarter, meaning 12, 12:15, 12:30, 12:45. So in this example, the time clock said 12:03 to 8:05, which is going to round to 12 to 8, which is 4 hours. Same thing here, rounds to 5 to 1, which is 4 hours. You add those two together, they worked 8 hours that day. When you're figuring overtime, it's basically the same thing. In this one, they clocked in at 8:33, which rounds to 8:30, clocked out at 6:02, rounds to 6 o'clock, so they worked 2.5 hours of overtime. So to calculate the actual pay, you're going to take how many regular hours they work times their regular rate. So in this example, this person makes $15 an hour. That comes up to $13.20 for regular earnings. They worked, then you got to figure up their overtime rate. So usually overtime pay is going to be time and a half, which means your regular pay plus half of what you make. So in this one, you're going to take 15, that's their regular rate, times 1.5, gives them an overtime rate of $22.50. So then you take the overtime hours of 6.5 that they worked times the rate of $22.50, and their overtime earnings is $146.25. So to figure their total earnings, you obviously just add their regular earnings plus their overtime earnings, and that gives you their total earnings for this pay period. Now that is going to be gross pay. Before any taxes are taken out, before anything else is taken out, that is their gross total earnings.